update. Before I start, just want to let you know that my MMT+Trader report is hot off the presses. This week's report is now available, so if you didn't sign up for the 30-day free trial, what are you waiting for? Go to www.pitbulleconomics.com and click on the tab that says products and get yourself a 30-day free trial to my report, MMT+Trader. And in that report, I analyze all the fiscal flows and the fiscal data and market action and Fed policy and everything else analyzed within an MMT framework. All right, as I do with everything. I'm sure you will find the report very, very insightful. So go ahead, get yourself a free 30-day trial, www.pitbulleconomics.com. Click on products. All right, so much for that. So what the hell happened today? Down 130 points in the market. Yesterday, I'm like, whoa, record spending. I'll get into the market in a second. Look, I went back and I looked at the spending totals, and actually 2009, that was the year of the stimulus. If you remember, 2009, we did 4.89 trillion, just under 4.6 trillion total federal government spending. That was an all-time record, and you may recall the market sell-off stopped dead in its tracks. That spending arrested the market collapse. And every single economic metric, if you look at it, turned around, turned on a dime. And we are on track to maybe beat that this year. So far, the 6-month total, we have half the fiscal year is gone. Okay, the 6-month total now is something like 2.3. I'm sorry, what am I talking about? 2.3 something trillion, 2.3 trillion. So if you double that, 4.6, that would be an all-time record high. But we're close. In any case, we're on track and we're close. So anyway, what happened in the market today, Mike? Hey, with your flows, what the hell? I mean, it's, some days there's not an explanation every single day. I hate to tell you that. It could be anything. It could be a million things. I mean, I woke up this morning and I saw the market was down, and I saw news reports about a Chinese boat being seized by the Vietnamese Navy. I mean, that maybe stirred up some fears of another war, as if there's not enough wars going on in the world. Japanese yen was surging. Okay? And by the way, what about the Japan debt crisis, huh, Kyle+Bass? That was a total ridiculous call. And I spoke about that on a number of videos that I posted here on my channel. I'm not going to get into it now. But I mean, Japanese interest rates are negative. People are literally paying the government to hold Japanese paper. What kind of a debt crisis is that? And the yen is surging. Anyway, you can go and listen to my videos, but the guy's completely... he's living in the world of like a gold standard. Just doesn't understand. Sorry. Look, as far as our market is concerned, I have to tell you, we are entering into a seasonally fiscally precarious period. Okay, April, got to pay taxes. April is tax month. So private sector bank accounts get drained. And that's largely what's behind the old Wall Street adage. You probably heard the old adage that says sell in May and go away. That's the reason for that. People's bank accounts get drained. They pay taxes, and then the market loses that buying power. Now, the government takes that money and it turns right back around and spends it right back out into the economy, but it takes several months to replenish bank accounts. You've always heard, like, you work X amount to pay the taxes, 4 months or something. It takes time to get that back out there again. Now, having said that, last year, the market did not sell off in April. It did not sell off in May. It did not sell off in June. It didn't even sell off in July. It sold off in August. hard. But I think that was because we hit the debt ceiling and we started to see some slowdown in the payments. Treasury went into its special operating mode when it didn't have the ability to make all those payments, or else it would not it did, but it was constrained by the debt ceiling. And I was talking about that stuff at the time, if you were reading my blog. And there could be a million other reasons that it went down today. I mean, the flows are important, as I'm sure many of you are starting to see from my calls and my commentary. But, investor sentiment can move the market too. You can get the herd effect. Something triggers it off, and everybody's, all I read every day is how there's going to be a crash. Everybody bearish. It's just a matter of time. This is so anything could trigger it all. Now, given that we are entering into this seasonally weak fiscal period, I could say, hey, the market's going to have a correction. I am going to call it according to the playbook of last year. I think we'll make it through. But I have to say one thing, with all this spending that we're seeing, nearly on track to meet the record of 2009. The economy's only growing at 1.7%. So that shows you, man, there's a lot of headwinds. We need this spending. I'll tell you what we need. We need a rate increase. A lot of people don't understand that. They're like, no, rate increase will kill it. No, that flows to income, okay? You could see it in my report, by the way. If you sign up, again, for the 30-day free trial, I have the graphs of those fiscal flows into interest income. You see it very clearly. It's gone up. That would help. Notice how everyone bought the market the other day when Yellen said, oh, we're going to hold off on the rate increase. So it went up for a day, and then what? It gave it all back. But if you raise the rate, I guarantee you we're higher a month, 2 months, 3 months down the road. No question about it. There's some other cool stuff in that report too. So sign up, man. www.pitbulleconomics.com and click on the tab that says products. Get a 30-day free trial. All right, that's it for now, folks. Check back later. Maybe I'll have another update tomorrow for sure. Take care. Bye-bye.